Imagine it's 2025. The S&P 500 has either soared to unprecedented heights, reshaping the fortunes of investors worldwide, or it has encountered unexpected challenges that redefine market expectations. What if you could position yourself today to make the most of whatever the future holds? In this video, we'll break down expert forecasts, key market drivers, and strategies you can use to benefit from the S&P 500's evolution by 2025. Whether you're an experienced investor or a beginner, this is the guide you don't want to miss. Hello and welcome to Capital Explore, where we decode the financial world to help you make informed decisions. Today's topic is one that every investor, beginner or seasoned, should pay attention to: the S&P 500's price prediction for 2025. This index is the heartbeat of the US economy, and understanding where it might go over the next decade can significantly impact your financial planning. By the end of this video, you'll have a detailed understanding of the key factors shaping the S&P 500, the expert predictions, and actionable steps to align your investment strategy with these insights. What is the S&P 500, and why is it important? Before diving into predictions, let's first ensure we're all on the same page about what the S&P 500 is. The S&P 500, or Standard & Poor's 500, is a stock market index that tracks the performance of 500 of the largest companies in the United States. This includes tech giants like Apple and Google, consumer staples like Coca-Cola, and healthcare leaders like Pfizer. But why is the S&P 500 so important? Because it's more than just a collection of companies. It's a reflection of the US economy itself. When the S&P 500 rises, it usually signals economic growth and optimism. When it falls, it often mirrors challenges in the economy. Historically, the S&P 500 has delivered an average annual return of about 10%, making it one of the most reliable benchmarks for long-term investors. Key drivers for the S&P 500's growth by 2025. What will determine where the S&P 500 goes in the next 6 years? Let's break it down into the key factors. 1. Technological advancements. The tech sector, which makes up nearly 30% of the S&P 500, is likely to remain a major growth driver, with breakthroughs in artificial intelligence, renewable energy, biotech, and automation. Companies like Nvidia, Tesla, and Microsoft could lead the index higher. 2. Demographic changes. As younger generations become more financially savvy and start investing earlier, their participation in the market could drive growth. Additionally, aging populations in developed countries may boost demand for healthcare and biotech innovations. 3. Interest rates and inflation. The Federal Reserve's policies on interest rates and inflation control will play a pivotal role. High interest rates can dampen market growth, while stable or low rates tend to encourage investment. 4. Global economic trends. The US market doesn't operate in isolation. Geopolitical developments, trade agreements, and the economic performance of emerging markets will all influence the S&P 500. 5. Corporate earnings. Ultimately, the S&P 500's performance boils down to how well its 500 companies perform. If these businesses continue to innovate, grow, and increase earnings, the index will likely rise. Predictions for the S&P 500 by 2025. Now comes the big question. Where will the S&P 500 be in 2025? Analysts have presented three main scenarios, each with its own assumptions. 1. Optimistic scenario, 10,000 plus points. In this scenario, rapid technological advancements, stable inflation, and synchronized global growth push the S&P 500 beyond 10,000 points. Experts like insert name believe this is achievable if innovation continues at its current pace. 2. Moderate scenario, 7,000 to 8,000 points. This is the most commonly cited prediction. Here, the S&P 500 grows steadily, but faces occasional challenges, such as slower economic growth or minor geopolitical tensions. Analysts like insert name suggest this scenario is the most realistic. 3. Bearish scenario, below 6,000 points. In the bearish outlook, high inflation, persistent geopolitical conflicts, or a global economic slowdown could limit the S&P 500's growth. While less likely, this scenario highlights the importance of diversification and risk management. What this means for you, an investor regardless of where the S&P 500 ends up in 2025. There are steps you can take to maximize your investment potential. 1. Invest for the long term. The S&P 500's history shows that patience pays off. Don't let short-term volatility distract you from your long-term goals. 2. Diversify your portfolio. While the S&P 500 is a strong investment, adding bonds, international stocks, or alternative assets can help you manage risk. 3. Regularly monitor and adjust. Markets change, and so should your strategy. Review your portfolio annually to ensure it aligns with your goals and the latest market conditions. 4. Use dollar cost averaging. Investing a fixed amount regularly, regardless of market conditions, can help you avoid the pitfalls of trying to time the market. 5. Stay educated. The more you know about market trends, the better equipped you'll be to make informed decisions. The S&P 500's future is full of opportunities, but like any investment, it comes with risks. Whether it climbs to 10,000 points or faces hurdles along the way, your ability to adapt and stay informed will determine your success. If you found this video helpful, please give it a thumbs up and subscribe to Capital Explore for more content like this. Let me know in the comments, what's your prediction for the S&P 500 in 2025? I'd love to hear your thoughts.